We have Mr. Surana, who's MK Surana, former CMD of HPCL, to help us understand what kind of margins are oil companies making right now, what's the scope. Mr. Surana, thank you very much for joining us right early in the morning. We bother you, but this is a good news for the consumer. And even some of the economists are saying that the condition right now of the government exchequer is so healthy that they can afford a small cut in taxes without really disrupting the fiscal math. But how do you see the impact on OMCs? Can they absorb it as well?
Good morning. There are 3-4 aspects of it if we see it holistically. The first part is that the inflation commentary which the RBI gave, which was showing that probably Q2 may go above 6.2, probably that is one worry which is there. But the second worry is the crude prices have been doing up and down between somewhere in 83 to 87, which is around $3 to $4 higher than what it was last month. The diesel cracks are also formed up and the dollar prices are also high. So there is a good possibility that the fuel prices may continue to be higher in the near future. And that will give a bit of a headwind for the inflation. Now, but if we see the total inflation data, which is there for July, which is gone up, let's say, around 1.95% month to month, but year to year it is still down and the overall inflation is lesser than what it was in April. Now, tweaking the taxation is one option with the government because the possibility of increasing the prices in the election year may be slightly a sensitive issue. So tweaking the taxation will give a leeway wherein the government can manage the prices. At the same time, OMC will also have a little bit of leeway to manage the day-to-day pricing without hurting themselves too much.
Sure. The other aspect, of course, Mr. Surana, is what happens to city gas distribution plays, because for them as well, this is sentimentally negative, right?
In the sense that the competing pressure will come, and there is some disruption in the LNG pricing, especially because the Australia workers union strike threat, and that has boosted up the LNG market spot prices. And therefore, there will be some disturbances there also, and somewhere it gets connected gas to oil. So there will be some impact there maybe to that extent. But it all depends on how the crude prices move, and there are some headwinds on the crude prices right now.
Right. Mr. Surana, just wanted to understand from your perspective as well, from the OMC's perspective, what do you believe is going to be, do you think that they would perhaps pass on the benefit completely? Are you looking at, for the CGDs as well, do you think that margins could be impacted?
As far as OMC is concerned, as you remember, the last year they got hurt in the process when the fuel prices were not increased for quite some time and they had under recoveries. The Q1 was good, but as I mentioned to you, and last time I also mentioned to you, that if the cracks remains healthy and the crude prices are hovering above 83, 85, somewhere range not below 80, then there is a little bit of concern for the OMCs, and they cannot probably take the under recoveries back-to-back years, and therefore I think a part of course the taxation benefit has to be passed on to the consumer, but maybe to some part they may have to retain if the crude prices are high.
Mr. Surana, such a pleasure having you on the show and explaining the math to us as to how this news actually would impact both OMCs as well as CGDs.
Thank you.
Thank you so much.